Young people aren't buying homes. We aren't starting families. We're not opening small businesses or even saving for retirement. And it's because many of us, especially people of color, are facing a serious problem. I'm of course talking about the student debt crisis. It isn't just about the economy, it's about racial justice. The topic of student debt in America is just like the debt itself, always on the rise. And unfortunately, the story is no different in Colorado. Around 743,000 Coloradans are currently struggling to find ways to pay off their debts, exacerbated during the economic recession, which has already disproportionately impacted our generation. We are buried underneath an ever-compounding mountain of debt and expected to rise above it all. Coloradans currently owe $2 billion in exceptionally predatory, much harder to pay off, and racially targeted private student loans. The higher that number grows, the worse it is for everyone. The consequences of sometimes staggering monthly payment are enormous for the entire economy. Student loan debt can prevent people from purchasing homes, making investments to their futures, building savings, or even paying everyday bills. The COVID-19 pandemic has put a halt on our economy and has grown the already massive debts thrown upon students. The student debt crisis already unfairly hit people of color harder, and with the addition of the pandemic, the gap of racial inequality only thickens. Nearly 1/4 of Black borrowers with private student loans report having fallen behind on at least one private student loan due to economic hardship, nearly 4 times higher than the proportion of white borrowers. Even as our elected leaders work to address racial justice, few realize just how key the student debt crisis is as a necessary step in alleviating serious racial equity issues. No matter where you live, how much you make, or what you look like, no one deserves to be held back by student debt. Colorado has a booming economy, and so should its people. So how did we get here? Today, Colorado ranks 13th in the nation for the highest student debt, and you can thank Taxpayers' Bill of Rights, commonly referred to as TABOR, for that. TABOR is a constitutional amendment that puts a chokehold on state government. It limits how much revenue we can collect and requires a vote for every tax or bond measure. Because of this, the state budget for higher education in Colorado has essentially been capped. Without access to public funding, universities have had to pass more costs onto students, raising tuition. And higher tuition means students max out their available public loan options early and have no choice but to turn to private student loans, what 30% of Coloradans rely on today. Private student loans have become the cornerstone of a vicious cycle. The increase in available loans led to larger loans, which caused institutions of higher learning to significantly raise tuition prices, which led to even larger loans, and so on. As the amount of college attendees increased, so did the price. The cost of tuition is vastly different than it was 30 years ago, and a 4-year public school in 1987 to 1988 averaged $3,860 nationally. Today, the average cost of a 4-year public school is $19,900. So you might be asking, why single out private student loans instead when public student loans make up the majority of our national and state student loan debt owed? A loan is a loan no matter who the lender is, right? Unfortunately, that's not the case, as private loans operate under a different set of rules, or more accurately, absence of rules, that make them significantly more predatory. If there's one thing you take away from this today, it's that borrowers can't get rid of private student loans. Many people end up trapped by circumstances outside of their control with a gargantuan bill and no way to pay it off. They aren't eligible for public service loan forgiveness like federal student loans. Even the 2020 federal level COVID relief bill, the CARES Act, didn't apply to private loans, and any loan forgiveness that the federal government passes in the near future likely won't cover private student loans. And now, thanks to a series of laws passed in 2005, not even filing for bankruptcy can free you. There's basically no means of recourse, even when private lenders violate borrowers' rights and exercise predatory lending practices. Student debt is already a huge financial burden, so at the very least, the process for paying back a student loan should be fair, consistent, and transparent. Private student loan servicers are profiting off of the lack of oversight, and business is booming. In the last 10 years, the amount of outstanding private student loans grew by 71%. The interest rate for private student loans is between 9 and 12%. Compare that to the 5% for federal student loans. The longer it takes you to pay it off, the better it is for servicers. That means Coloradans, who are hit hardest by the pandemic, are burdened by month-to-month student loans when they can't even afford the cost of living. While private student loan servicers are making a profit, regular Coloradans are fighting for the scraps. Very few borrowers go into a loan hoping to fail. Many of these loans seem innocent on the surface, but they are 100% designed to fail to default. And after these loans default, student loan servicers slice and dice them, selling off chunks to different collection groups so borrowers don't know where to go when they need help because they don't know what company, or more likely companies, own their loan. Not all borrowers are created equal under the private loan infrastructure. Oftentimes, borrowers are at the discretion of a loan service call center and have to jump through hoops to get a simple answer. Without any standard financial regulations in place, bias, favoritism, and retaliation are commonplace. Your ability to successfully repay a loan depends on the whims of those who issued the predatory loan in the first place. These factors all lead to systematic barriers that unfairly discriminate against people of color, stacked on top of centuries of oppression. Eventually, it got so bad that in 2017, the Consumer Financial Protection Bureau took enforcement action against one of the largest creditors in the private student loan market for falsifying affidavits and suing borrowers for debts it couldn't prove they owed. These companies used the same practices that the predatory players of the mortgage crisis used: dual tracking, lost paperwork, and robo-signing. Shady lenders that have spent their careers stealing from unsuspecting borrowers who have no legal recourse. The reality is that in the modern workforce, you have to have a college education to make it. Even entry-level retail positions are beginning to require some college background. Higher education has in many ways become a precursor to a living wage. It unfairly saddles millions of young people with debt for something we've claimed is now a public good like K-12 education. Plainly, many people will pursue a college degree whether or not they can afford it, and with no viable alternatives, the only option available to many borrowers are exactly like these predatory loans. Much like clean water, accessible housing, or internet access, education has become a fundamental necessity in recent years, and it's time we start treating it like one. Colorado has a booming economy, one of the strongest in the nation, and we have a high number of college-educated adults hoping to invest in their future. But student loans threaten our economy and stability, burying so many of our fellow students, especially those trapped under private student loans. Addressing the student debt crisis is crucial to addressing COVID-19 economic relief, just as protecting people from predatory private loan practices is crucial to addressing systemic racial inequalities. Our students are our future, a future that Colorado is failing to protect.
According to the National Consumer Law Center, Colorado currently sits at a D rating for protecting consumers.
Student debt is driving up racial disparity, inequity, and harm, and it's impacting generations of Coloradans who are held back because of it and are prevented from building up savings, making decisions in their best interests of their families, making decisions to start a family, obtaining quality healthcare, buying a home, and so much more. It is time for private student loans to have the same transparency and the same protections for borrowers that federal loans provide. For too long, private loans have unfairly discriminated and abused people of color. There is no good reason to allow predatory lenders to rob citizens of their future, to target high schoolers and set them up to fail, to destroy their credit and cost them an untold tens of thousands of dollars, far in excess of the original loan amount. Getting an education shouldn't be a punishable action. It's time to overhaul the private student loan system with long-term structural change that will put a stop to the racist, extortionist practices once and for all.